They lost everything in partition, yet their courage never broke. How the KRBL legacy was built, and the billion rupee story of India Gate Basmati. Imagine this, a family that had built a business in its own name, created an identity in its city, earned people's trust, and then one day history turned in such a way that everything was left behind. Shops, mills, agencies, banks, property, roots, identity. Everything. People were fleeing, cities were burning, and those who until yesterday had thriving businesses were now looking for a way to save their lives. That is where the fear begins. Because losing a business is one thing, but losing your entire world is something else. And the curiosity is this. Can a family that came to India in 1947, almost empty-handed, really go on to build a company that the world today knows as India Gate Basmati? This is the story of the legacy of Khushi Ram and Bihari Lal, which today is known as KRBL Limited. The name KRBL itself comes from Khushi Ram Bihari Lal. The company's roots go back to 1889 when it began in Layalpur, which is now known as Faisalabad in Pakistan. In KRBL's own annual reports and public company history records, it is stated that this legacy is more than 135 years old, and that it began as a small trading structure which later turned into one of the biggest stories in rice trade, milling, and branded basmati business. Khushi Ram and Bihari Lal were not just traders, they were trusted businessmen of an era when trade depended less on contract papers and more on reputation. Layalpur, which before partition was counted among the most active commercial regions of Punjab, was where these brothers began with the trade of rice, wheat, edible oil, and other agri products. Later public references also show that the family had expanded into rice mills, cotton-linked business, commission agency work, and even financial dealings. So this was not the story of a small shop, but of a growing business family that had already established deep roots in its region over time. But when history turns cruel, it does not distinguish between hard work and legacy. The partition of 1947 was not just a political event for this family. It was an economic, emotional, and existential earthquake. Partition shattered their business too, just as it did for millions of families. The cities where their name carried weight were now in another country. The wealth built over generations was left behind. Those traders who until yesterday were deciding the prices of goods were now trying to get their families to safety and somehow reach India. KRBL's public history and media profiles show exactly this. That after partition, the family had to come to Delhi and start almost from zero. Just think about it. A family that had once been an established business name had to stand again in areas like Naya Bazaar and Lahori Gate and begin its journey all over again. This was the very turning point where most people break. Many families never managed to stand economically again after partition. But this is exactly where the legacy of Khushi Ram and Bihari Lal refused to give up. According to public company history, the family restarted in Delhi through rice and oil trade. There was no glamorous launch, no big factory, no corporate office. There was only experience, business understanding, and that stubborn determination that what was lost would not be mourned forever, but rebuilt. That is the most powerful part of the story. Many people look at the final result in a success story, but the real wonder lies in that mindset which chooses to build again even after destruction. KRBL's later growth stood on that very decision. Trading began again in Delhi, then slowly the focus strengthened around the rice business. And in the coming decades, the family began to see basmati not just as a commodity, but as a value-added opportunity. That strategic shift was what moved the company from being an ordinary trader toward becoming a modern rice processor and exporter. Over time, KRBL increased its focus on milling, grading, sorting, packaging, and export-oriented infrastructure. According to the public company profile, a sorting, grading, and packaging unit was established in Ghaziabad in 1992. After that, capacity was built in places like Alipur, Gautam Budh Nagar, and later Sonipat. This was the phase when KRBL was moving out of Mandi-linked rice trade and transforming into an integrated rice processing company. And this integration later became its greatest strength. Then came the turning point that took the company into every household, the India Gate brand. The print and company-related public history say that the commercial rise of the India Gate brand began in the late 1990s, and later it became the most recognized branded basmati name in India. In the world of branded food business, a good product alone is never enough. You need consistency, trust, packaging, distribution, and above all, consumer memory. KRBL positioned India Gate not just as a rice brand, but as a promise of quality. That is why today, the moment people hear the name India Gate, the fragrance of basmati, long grains, and a premium image all come to mind together. Today, KRBL describes itself as one of the world's largest rice milling companies, and in public descriptions, it has even been called the world's largest rice miller. In the company's recent annual reporting, there is clear emphasis on basmati heritage, deep farmer linkages, and scale-driven operations. This scale is not just a marketing line. The company's historical build-up, integrated plants, bran oil business, captive power use, export network, and premium branding model have made it a dominant player in the basmati ecosystem. A family story once shaped by displacement gave its product a name that sounds almost like a national identity. India Gate. There was symbolism in that, and strategy too. If we look at the financial picture today, market data from March 2026 shows KRBL's market capitalization in the range of around 6,500 crore. That means the company is still a listed entity worth thousands of crores, and its story is not just one of nostalgia but of real corporate scale. But it would be incomplete to understand this story only through family grit and branded success. KRBL's real strength has been that it turned basmati into a global product, with demand sustained in markets like the Middle East, Europe, North America, and others. According to APEDA's current trade data, India exported 61 lakh metric tons of basmati rice in 2025, with a value of more than 50,000 crore. Major export destinations included Saudi Arabia, Iraq, Iran, the UAE, and Yemen. So basmati is not just a kitchen product, it is a major part of India's agri-export strength. And in this entire story, Iran and the broader Middle East have historically been very important markets. This is where the new tension in the story begins. Because the Middle East that gave Indian basmati such a major market has now become the center of geopolitical risk, creating a fresh challenge for this industry. According to Reuters reports from March 2026, because of the US-Israel-Iran conflict, war risk premiums rose on shipments passing through the Strait of Hormuz. Insurance became expensive, freight costs shot up, and exporters became cautious about new deals. Reuters reported on the 3rd of March 2026 that nearly 4 lakh metric tons of basmati rice had been stuck at ports and in transit, and that new deals had almost come to a halt. It is important to understand here that the relationship between basmati and the Middle East runs very deep. A large share of India's basmati exports goes to markets like Saudi Arabia, Iraq, Iran, the UAE, Qatar, and Yemen. According to Reuters' report of the 12th of March 2026, the Middle East war particularly affected basmati shipments, while some non-basmati rice shipments continued toward Africa and South Asia. That makes one thing very clear. The basmati segment is more vulnerable because its demand concentration in West Asia is much higher. If shipping lanes, insurance cover, payment flows, and buyer confidence are affected, then the pressure lands directly on exporters. Iran's case has been even more complicated. Reuters reported in January 2026 that Indian rice exports to Iran had already come close to a standstill because of protests, economic turmoil, currency pressure, and fears linked to US-related tariffs. The report also said that India's exports to Iran had fallen from $3.51 billion in 2019 to around $1.24 billion in 2025, and rice was a major part of that trade basket. That means even before the war, payment risk and policy uncertainty were already troubling the basmati business. The conflict only intensified that pressure. Against this background, the Indian Rice Exporters Federation advised its members to avoid new CIF contracts. That is, cost, insurance, and freight-based new deals. According to Reuters and PTI-linked reports, exporters were told not to take open-ended risks because freight and insurance costs could jump sharply at any moment. In CIF contracts, the shipping-related risk falls to a great extent on the seller, so in a conflict zone this can become a major financial trap. This advisory did not mean that basmati demand had disappeared. It simply meant that geopolitical uncertainty had turned the trade structure itself risky. In such a situation, for companies like KRBL, the challenge is not only sales, but also margins, logistics, payment cycles, and inventory management. If goods get stuck at a port, if a buyer delays the deal, if shipping insurance becomes expensive and freight costs suddenly rise, then profits are bound to be affected. Not only that, if rice prices fall in the domestic market and export dispatch slows down, then working capital pressure also increases. In its report, Reuters also pointed to storage burdens and force majeure-like situations. This shows that the basmati business is not just a game of fields and mills. Global politics can influence its fate too. And yet, this story is not just about fear. There is resilience here as well. In a recent report in the Economic Times, citing CRISIL ratings, it was said that despite the Middle East conflict, India's basmati exports may remain broadly stable, and modest growth in industry volumes could still be possible, because there is very limited immediate substitute in the world for Indian basmati. This point is important too. India and Pakistan are the major large-scale producers of basmati, so Middle Eastern buyers cannot stay away from this market for long. That means the short-term shock may be serious, but the long-term demand structure is still seen as intact. And perhaps that is the real strength of legacy companies like KRBL. They have lived through not just 1 or 2 years of business memory, but generations of it. From Lyalpur to Delhi, from partition to reconstruction, from commodity trade to branding, from local mandis to global exports, and now to a shipping world shaped by geopolitics. This family legacy has learned to reinvent itself in every era. That is why today, when Middle East tensions are putting pressure on the basmati trade, KRBL's story feels less like panic and more like preparedness. History has tested this company before too. For a company that rebuilt itself after surviving the fires of 1947, the trade disruption of 2026 is serious. Yes, but not final. If this entire story has to be understood in a single emotion, then it is not just the corporate biography of the India Gate brand. It is the story of rebuilding after displacement. It is the story of traders who first earned trust, then lost everything, and then rose again through trust itself. It is the story of a family legacy whose identity did not change even when geography did. The business that began in the names of Khushi Ram and Bihari Lal is today present in the stock market, on the export map, and in Indian kitchen culture. That is why KRBL's story is not just one of business success, but one of historical endurance. If this video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible, but in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.